Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It's Teaching Tech Tuesday. Let's talk about a top signal to watch for in 2025, maybe 2026. It's a good idea to start to think about what the landscape could look like in the next couple of years. A good way to do that is with a very broad brush. We're looking at the forest. We're not looking at the bark on the trees here. Dominance is really good for that. Total market cap is good for that. So we'll take a look at all that. But one of the reasons dominance was first conceived and thought of and utilized in 2017 in the early stages was because so many coins were being created. So many projects were creating coins. This was, of course, the ICO boom. Back here, there was the block size wars and all this other stuff trying to compare BTC against the world. And during the ICO boom, the heyday, dominance fell basically 70%. And if you don't know what dominance is, you see this and you think, oh, wow, look at all this, there's all this stuff. And that's the thing. There's all this stuff that anybody can make. Anybody can declare a market cap. Anybody can try to get listed on any of these market cap tables and you'll show up here. But so it's important to know what's in dominance, obviously. Okay, what is it trying to tell you? It's trying to tell you that there's a lot of very speculative money in the ecosystem if dominance is declining. How might we see speculative money in the ecosystem? General attitudes, general sentiment. We can talk about liquidity. We can talk about QE versus QT, as Ben Cowan has reiterated time immemorial now. So those are ways that dominance may go down to look for into 2026. Realistically, I somewhat expect a path where alts potentially do better into 2026. I'm not so sure about 2025 just yet, but it's something to watch. And depending on how you want to use dominance, if you want to use dominance, the Bitcoiners don't care. Dominance to them is 100%. The altcoiners don't care because they just try to do what they want anyway. They don't care if they're losing against BTC. So who's dominance really for? I don't know. For analysts, I guess. But one thing you can do is put on some moving averages. So this is the weekly time frame. This is the 20-week and the 100-week moving average. I just picked two. It doesn't really matter. But you're looking for any sort of signal here. You're curve fitting on purpose. What has worked previously that is working today is the question. The 20-week for both spot and anything else you can think of is generally a very good gauge for sentiment, for trend, that sort of thing. So if we are not struggling below the 20-week, if we are continuously rising for years above the 20-week, that is a sign that we are not seeing a ton of speculation broadly in the ecosystem. Contrast 2023 to present to 2016 to 2018. It's a different story, right? It's a different ecosystem entirely. So what would the risk on alt rally look like? It would look like a break below the 20-week moving average and eventually, additionally, probably a bearish 2200 cross on dominance. And you can see just how long this took, 2019, 2020. And it could take a very long time into 2026, into 2027, right? There's no guarantee we're going to see this same cycle repeat. That's the other thing. Just because we've seen liquidity cycles in alts and speculation and money printing, there's no guarantee we'll see that again. But what am I looking for alts to be strong would be a chart like this to look bearish. This does not look bearish at all. And this is about as simple as you can get it. I mean, you can put a channel on this, I guess. This doesn't say where this goes. This could go to 60. It could go to 70. We'll see. But it doesn't look bearish anytime soon here. And what you'd want to see is a breach of the 20-week as well as a bearish 2100 cross. And if you can get it, a push below the 100-week. Nowhere close to that yet. So we got time on top of time for that. We can, of course, add this is US liquidity. And it's kind of tough because COVID, is that a once in a lifetime event? Is that going to keep happening? Do we need that amount of stimulus to see dominance drop significantly? That's really the question to think about. So dominance dropped from, let's say, 70% to 40% after we printed, let's just say 3 trillion. So do we need another 3 trillion to drop dominance? Do we need another percentage multiple on US liquidity to drop dominance from 70 to 40 again, or whatever to whatever again? I don't know. But if we do see this year over year rise in liquidity, I mean, look at 2016 to 2018, we can say this was all regulatory arb And this is also never going to happen again because regulations have changed. The money that was flowing into ICOs can't really happen again, at least in the form of ICOs. It can happen in the form of other regulated products, potentially. We're thinking like tokenization, RWA, stuff that doesn't exist yet. That's possible. Anything's possible, right? But that's something else to watch along with the moving averages and dominance. If we do see spikes in US liquidity here, how does dominance react to that? I think this is more important than just the Fed balance sheet. The Fed balance sheet is part of this equation, but it also includes the reverse repo. If you want to take the TA on dominance a step further, you can use the classic Williams fractal alligator system, other than the cloud, as a trailing stop loss system for dominance. So what do you want to see? You want to see 5,813 moving average crossed bearish, and you want to see price below the current support fractal. So we're nowhere near that. We've had breaches of the support fractal, so those would be trailing stop losses, but we've also had continuation above resistance fractals, which would mean bullish continuation. So there hasn't yet been a full stop out here. And because it's been such a smooth ride and an easy ride, any perturbation in this continuous rise should be extremely obvious, which is why it's sort of a stress-free trade. You just wait till it flips. That's it. First thing you would see would be a break below a support fractal. And the next thing you'd need to see would be a bearish 5,813 cross on the weekly. And if I had to guess, we're going to see that if liquidity rises. No guarantee. We may see it with, we may see it without. Before I go any further here, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro at the link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to US and US territory customers by Payward Ventures Inc., PVI, DBA, Kraken. For Bitcoin here, we are still trying to hold above this range. This is just a bearish potential idea. Do we print a head and shoulders into the election? I certainly hope not. I'm not counting on it. I'm not positioned for that, but it is something to watch for into and around the election. We've also got this pending head and shoulders continuation that we potentially are at the neckline of here. You know, that's just the nature of the beast because of the massive range that we're in. It's half of one thing, sort of completed the other thing, not really going anywhere, kind of overbought on low time frames. You can see just price relative to the key June there. So there's nothing super clean. Nothing is ever as clean as just a plain old horizontal. So we don't have that here. It's just a lot of diags, a lot of potential, a lot of possibilities. But all in all, some alts are doing better. It's just you have to play the guessing game as far as which ones you think are going to outperform. But yeah, they're there. You know, the reason we watch dominance is because it gives great clues into where best to put capital to work in general. There are plenty of things that outperform the S&P. There are plenty of things that outperform the NASDAQ, but indexes are used as a benchmark for everything else. And aside from dominance, I talk about this every Wednesday, the total 2 over BTC chart. This is also very clearly bearish. Takes a long time to turn around and just continuously speaks to the fact that it's going to take some time before we see a top in the alt market, but it's going to take some time to actually see alts start to outperform. So I'm going to be talking about this, which is what to look for when the market as a whole collectively has topped, but we're not even to the point where you'd expect alts to outperform just yet. But let's say we are deep into 2025. I don't think Q2 2025. I think Q4 2025. So a year from now, we'll see how this ages at the end of next year. But I think likely 2025 into 2026, we may start to see signs of excess speculation in alts. And if we look at 2017 into 2018, what did we see? We saw a divergence here between BTC in the candles and Total 2 in the white. When Total 2 market cap exceeds BTC's market cap, it's only ever happened a couple times, and that has been effectively the top of the market. It's not usually a good sign if the riskiest of the risky stuff is, air quotes, worth more than BTC. That may change in the future. That may never happen again. I have no idea. But all I do know is that if it does happen again, that's a massive, massive warning sign that we are very close, if not at the top for the cycle. So this is absolutely something that you should be watching down the line if and when alts start to take off again. It likely represents peak retail FOMO, peak retail excitement, and also exhaustion of the BTC rotation type trades, where some people decide that they're better off trading alts over BTC, and BTC just has a very difficult time overcoming that because it is less risky than altcoins. So that happened 2021, happened in 2022, was this SBF related, right? Just because we've seen it twice doesn't mean we'll see it again. And even the second time, it's questionable. Was this actually what I think it probably is? Correlation isn't causation, obviously, but I'm pretty sure this is retail FOMO type activity. But when you've got an exchange selling BTC and buying alts, that's going to show up on charts like this. But it still lasted for quite some time before eventually correcting itself deep into 2023. And you can see just the crazy divergence here on alts relative to BTC, looking at total 2. Not even stripping out stables, just vanilla total 2. We can also just do BTC minus total 2. It'll show you the same thing. So what I do on TradingView is I have an alert for this. When this goes negative, that's when I know it's time to take some evasive maneuvers in the market. And the good news is here we have plenty of room. BTC and alts can grow together market cap wise, but it's when alts grow more than BTC significantly that again represents FOMO, crazy speculation, a bunch of new coins all at once, right? Just unsustainable, logically, moves in the market. This is how that looks against BTC. And even though the 2021 top wasn't the actual all-time high, it was very close, right? It was within the margin of error of whatever the next all-time high was. And again, we'll never know if this was SPF or not. We don't have the counterfactual there in this timeline, but it did work as intended in that it was still the top, right? It was still the top when alts were worth way more than BTC was. And even if you don't trade alts, this is a good signal because it's just another negative for the ecosystem that, let's say Bitcoin goes to 5 trillion or something. If the entire ecosystem X BTC is at 7, then yeah, we're probably a little overheated, and it just gives you another different vantage point on everything collectively. We can also look at exchange traffic. We can look at ranks in the App Store, that sort of thing. I'll put this in the description of the video. But this is also another very interesting gauge just to see what are people doing on the retail side? What are they looking at? Are they logging in? Are they downloading stuff, right? Any sort of alternative data for sentiment can certainly be extremely valuable when we're talking about a digital asset and speculation. That's just pretty obvious. This is another one that shows you coin app rank relative to finance apps in the App Store. But hands down, end of cycle times, end of times would be this exact chart, BTC minus total 2, something that we hopefully won't see anytime soon, below 0. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.